This Twin Peaks Investing podcast is brought to you in association with SharePad from ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.
Hello and welcome to the Twin Peaks Investing Podcast. It is 6:30. It is the 24th of July. And we are here for Twin Peaks Investing Podcast number 132. And we are blessed to have with us a guest, fund manager, Jamie Ward. He's back. You asked for him to come back. He's come back. We're blessed to have him. You can find him on Twitter at JamieCW. So please follow him after he shares some fantastic insights of the markets with you again. And of course, I've got my fantastic co-host, Henry Viola here at HT Viola. Make sure you follow his account. Follow his blog as well. And there's me, Peter Higgins at Conquest 3. As I always say, you don't need to follow me because I've got nothing to share with you, you know? Right, ladies and gents, here we are. We're going to talk in this particular podcast, thematically, because of the huge tech IT outage we had just a week ago or so. So we're going to talk about some stocks around that. James is going to talk about something completely opposite to that. I'm going to talk about some stocks related to the cybersecurity sort of things, and also some other things I found which may be of interest, and also a howler of a stock which I mentioned in a previous podcast, which today came out and went, and I think it was Martin Flitton went, no chance, not going anywhere near that stock. So we've got to admit sometimes when we talk about a stock, give a research idea, and it doesn't work out. It's all about transparency on here. So I'm going to firstly go to Jamie, because he's been away for a little while. We always know that Henry's busy doing his stuff. But we've also, before we get to Jamie, without saying how old he is, and he's got a bit of a grey streak, so people think he's a lot older than he is. But Henry celebrated a birthday yesterday. So happy birthday to Henry Viola Hare.
Thank you very much, Peter.
Sir. Yeah. And I know you took it a bit easier on the beers as well last night compared to the weekend, so we won't go into that, okay?
Well, yes and no. Don't ask me anything complicated is all I'll say.
Okie dokie. Just going to ask you to tweak your volume up just a little bit for me there, Henry, please.
Oh, yeah.
Right. Jamie, we're going to talk about cybersecurity stuff in a little while, but I wanted you to give the opportunity to just bring up to speed what you've seen in the markets and then go in straight into one stock. We don't want to keep everyone here for 90 minutes, which we possibly could do. Otherwise, we'll start selling cinema tickets. So just quick, what have you seen? How's life been? And then give us a stock, please, mate.
Yeah, I'll mainly go into the stock, but I'll talk about a little bit about how I've got to the one I'm going to talk about, which is BRBY. We're recording this on the 24th of July. I think it comes out on the 26th, if I'm right, Peter. But today, 24th of July, I've published on SharePad about BRBY, but I referred to I called the article "Trust Your Heart" or "Go with Your Heart" or something to do with your heart. I can't remember exactly what I called it. And this is about how my approach to stock picking and timing entry into stocks has evolved over time. So like a lot of particularly professional investors, I've come into the industry numerical degree followed by CFA. In my case, it was a maths degree followed by CFA. And the problem is with people who do numerical degrees followed by CFA is you can fall into the trap where you look at the market as like an algorithm that should be solved. So if you know everything, you can work out what's going to be the best thing. It's either that or you go completely opposite end where you believe the efficient market hypothesis it reigns completely 100% true and you just go fully passive. I was always an active guy. So my sort of intellectual inclination was always to think, well, there is a right thing to invest in, and you can work out what that right thing is by solving the market, if you like. As I've got older and more experienced, then you've had one or two situations where you've thought, I know exactly what this business is, and it's going to be brilliant. So this is an investment, and then watched it do the opposite of what you think because you've missed something. When that's happened a few times, you suddenly realize that you can never know everything about every company. So as much as you want to be a completely 100% fundamental investor, this is how I do things. I look at the company, I determine whether it's a good investment or not. What you need to do is sort of learn to sort of follow the market. And fundamental analysts can be really sniffy about the idea of technical analysis. But technical analysis is something that has become a part of my own personal process. And this article is more talking about why it's become part of my process. And the stock I talk about in it as a way of sort of creating an example for this way of thinking is BRBY. So BRBY is arguably a quality business insofar as it's got brand value, i.e. BRBY, if you put BRBY print on something, you can charge more for it. You can see it in the kind of mid-cycle margins that a company like BRBY makes. Their returns on capital can be enormous, which is a kind of good signifier that there is some quality there. Now, if you look at BRBY's share price over the last 3 years, it's gone from about 25, 26 quid at its peak and until about the start of this year when it was about 12. And you're looking at it at 12 and thinking, okay, on 12 quid, theoretically, it's on a P of about 11 or 12. It had a dividend yield of probably about 5.5 to 6. You've got this kind of quality aspect. You think, well, if it gets much cheaper, then somebody will come in and buy it. LVMH, probably not, but that's usually the people that people say will buy BRBY, or private equity. So you think, okay, it's cheap, I should buy BRBY. 10 years ago, that's probably what I would have done. But what I did do is I looked at the share price, and the share price trend on BRBY up until the start of this year from 3 years ago was horrendous. It was just down, 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 down. There's no little troughs with little rallies. It was just down, trending down, and it looked horrendous. And my view was at the start of the year, 12 quid, that just doesn't feel right. It looks cheap, but it doesn't feel right. And this is that point about trusting your heart. I'm not going to always get it right, but with BRBY, I've completely got this right because it didn't feel right at 12 quid, and now it's 7. And it's 7 because we found out last week that demand for its goods is continuing to decline, and it's worse than what they had been saying. You could see it in the market because you could see it in the share price, but you couldn't see it in the actual figures. So a fundamental analyst would never be able to see there's something wrong with BRBY in January, February, March, April. They had to wait until July before they could see something wrong with it. But you've waited until July. You've waited from 12 quid to 7 quid, and you've lost, what, 40% of your money. So all this is a roundabout way of saying, as I think actually BRBY is probably still a decent business, and there probably is an investment in there somewhere. But the way my analysis has evolved over time is I'm not interested in buying something where the share price looks like that. I want to see some positivity, and it sounds a bit airy-fairy, a bit like, well, with the share price is not going up, that's not a reason to buy something if you're a value investor like me. But I think you can really improve your investment returns if you look at a business, you look at a share price performance like BRBY, and you think, okay, I've done the fundamental work, I think it's a good business. Now I need to wait for the share price to show it, because the share price is showing a reality that I can't necessarily always see in the figures. So that was a business I wanted to talk about, is BRBY, but more to direct people to maybe go to SharePad and actually read the article, because there's a bit more nuance to my point about this.
Well, thank you for sharing that. It's one of those, brands, UK brands that did very, very well for a long, long time, and enriched a lot of people. And up until 2023, I'm looking at the charts here now, it just seems to have been rolling over. And I'm not sure if that's all linked with the Chinese market and people buying over there, or European market, or everyone's gone further up market regarding other brands, or whether or not because lots of people that weren't supposed to be wearing BRBY starting wearing BRBY, and then the brand.
You've got to be careful with BRBY and LVMH and stuff. It's all, not all, but a lot more of it is Asian buying than you think.
Yeah.
So you look at the proportion of sales of BRBY that is in Asia, and you go, okay, that's Asian selling, and that's the percentage is in Asian selling. But if you go to Burberry, the Burberry store, or there's two Burberry stores in London, or Bicester Outlet, or you go to the one in Manhattan, or wherever it happens to be, what you'll see is lots and lots of Asian people, and they're
Yeah.
tourists. So actually,
Yeah.
a lot of the selling across the board from Asian. And
Yeah.
I don't know if it's completely the case with Burberry, but certainly this LVMH is coming under the cosh a lot recently as well. And I think a lot of that's supposed to be a bit of a tit for tat thing on trade. Europeans on the whole aren't very happy with the way that the Chinese appear to be dumping EVs here, i.e. they're
Right.
selling
Okay.
them under cost. And the European Union is sort of threatening to sort of put tariffs on things like that. The Chinese in particular are not going to take that line down. And you're beginning to see it, I think, in stuff that is a lot is sold to China. I think Goldman Sachs had a note out last week or the week before, basically saying, be very, very careful of European businesses that have a large Asian, or particularly
Exposure.
Chinese, but Asian in general customer base. And that particularly actually highlights Germany, but you know, in the UK, Burberry is a fairly good example. And you know, if you're waiting to now to avoid, no, if you owned Burberry for the last 2 years, it's too late to sell now, I suspect. You know, you needed to be paying attention earlier, but that's brokers
Absolutely.
for
So
you.
you've got this 5-year chart here now, and it's saying it's down 69%. You've got a year-to-date chart saying it's down 49%. That's a year-to-date. And you mentioned who's going to buy it potentially. It's got a 2.53 billion market cap, PE of 9.5, dividend yield of 8.6. Is it too big for Mike Ashley to buy it? He buys everything else that's got a brand name. Or will he go for Mulberry and Superdry in the car crash sale?
Yeah, I mean he's super deep value. He buys things that have gone bust. This hasn't gone bust.
Bust. Yeah. Repackaged. Yeah.
I mean, if it got that bad, it might, but I don't think this is the kind of thing he would go for, if I'm honest.
Okay. Henry, thoughts on Burberry, mate? I know, have you got some of the Burberry in your house? I know you like, you know, a nice gown.
Not a big buyer of Burberry, but I think Jamie makes a really, really sound point there. I mean, when I first started investing, I fell into this trap of, you know, you build your watch list, you set your price target for where you think it's good value, and it hits the target, and then you go and buy, and then it drops another 30% because you're not paying attention to what the price is doing. And, you know, with price targets and watch lists, usually when it's hit that price, it's come off the boil and it's starting to fall, and that negative momentum can carry it a lot further. So, you know, I think Jamie's spot on the money there about value investors needing to pay attention to the technicals as well, because like you say, if you're just waiting for your trading updates once a quarter or every 6 months or whatever, you're going to miss a lot of obvious price action.
Absolutely. I mean, this is the difficulty with some of the individuals that we know that are purely using technical analysis, not using fundamentals as well, or looking at what's going on a macro level, or looking at what their peers are doing. You know, you see the stock moving up slightly above a certain technical ratio that you use, moving average, and you think, oh, crikey, it's now moving up. This is the time to get in. And then bosh, the share price gets hammered for 25, 30, 45% in a couple of days. So, yeah, it's important to look at the fundamentals. But at some point or other, as with all these luxury brands, and I mean luxury as in, you know, market cap above 1.5 billion and got revenues in America and Asia, someone will look to buy it unless the management can sort themselves out. And it may be a case of they're going through this flux for the last 5 years, and somebody who's sitting there on the register as a shareholder with 10% 5 years ago is going, sod it, let's go and speak to some activists and get this sorted out and get some new management in. So who knows? Who knows? Any thoughts on that, Jamie? Any activists on the register coming?
If I had to guess, if it does get taken over, I had to guess, I'd say it's probably more likely to be PE. And then
Private equity. Okay.
They'll relist it at a high price a few years later, and 10 years after that, it'd be wrecked because they'll have cheapened the brand. But that's just what PE do. You just look at Doc Martens.
Yeah, they tend to do that. Yeah, in fairness. Right, I'm going to just do a bit of history lesson here before we get to Henry. I've got my little almanac here because I am an old almanac in comparison to these young gents on the pod. And it's Friday. Was Friday when this is an old one, so I'm going back on the date. This is an almanac from 2015. It shows how long I've been in the game, doesn't it? 2015 almanac. And 24th of July, 2000, BP, remember BP? Or should I say, remember BP Amoco reverted its name back to BP from BP Amoco and unveiled its new green brand. So was that the beginning of the ESG, environmentally friendly, aware consumer brand where they needed to do the repackaging? 24 years later, what they're saying, we're going to spend less on ESG and environmentally friendly stuff because we need to dig out more oil. So that's quite interesting. Right, so that's just a little bit of an archive I wanted to share with you guys. 24 years since they changed the name from BP Amoco. No one can remember that. Certainly not you two, two pups. Anyway, right, we have got the FTSE right today. And the last pod, I was saying to you, ladies and gents, that I was feeling a little bit more confident about the markets because we've got a bit more stability. All this sort of infrastructure spend's going to come on, more certainties, more private equity is going to come and invest in the UK, blah, 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 blah. Market's been ebbing and flowing. We peaked our heads above 8,200 a couple of days ago. Today, we're back down, and we actually hit a new low since the 1st of May, right? Remember 1st of May, we went on a run. We hit 8,474, which was our high. And we were talking about maybe going to 9,000, maybe not. And I'm concerned that we now hit a new low since the 1st of May. 1st of May, we're at 8,121. Today, we hit an intraday low of 8,112. We're getting close, lower and lower and lower, and then popping up, coming back lower. We're in lower lows, going towards that. We need that nice, secure foundation at 8,000. We do not want to pierce that during the summer. Otherwise, it could be a recipe for disaster. So we closed today at 8,153 on the FTSE 100, down 0.17%. FTSE All Share closed down 0.24% at 4,468. FTSE 250, the engine of the FTSE, closed down 0.67% at 20,950. And the FTSE AIM All Share closed at 776, down 0.45%. So across the whole market, UK market today, all negative. So we need something to give us a little spark higher. We do not want to pierce that 8,100 because we're then going to end up back towards 8,000. I'm not sure what the catalyst will be. People are talking about interest rate cuts in America. Maybe we'll be able to spice things up and help us over here. Maybe we'll consider an interest rate cut over here. I don't know. Thoughts on interest rates, Jamie, Henry? Where do you think the next one's going to go in the UK? I don't think they're going to do anything at all here, but maybe in the US they will.
I think the US is probably going to cut well before the UK does. I think the UK is probably going to hold out to the end of this year, and I don't think we're going to see a rate cut until spring next year is my prediction.
Okay. Any thoughts there, Jamie, on that?
No, I agree. I think September is usually a big meeting in the US. I suspect September we might see a cut in the US. And like Henry says, I think the US will go before the UK. My only concern is I'm not convinced we're finished with inflation. So I think we might have some cuts, but a couple of years down the line, 3-4 years down the line, maybe, I don't know when, we may start going back the other way again.
Okie dokie. Right. We're going to get onto the theme. The theme is the outage we had. The global technology outage, which was sparked by CrowdStrike's faulty update, estimated to have cost the US Fortune 500 companies $5.4 billion. And as the cybersecurity firm has vowed to make changes to prevent this happening again, I would swear then and said blah 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 Sherlock, but yeah, trains, planes, and automobiles and everything else just stopped. We woke up in the morning, there was no RNSs from the London Stock Exchange. Everything was just like, well, what's going on here? And there's lots of memes going around about one person pulling the plug out, or one person saying, I'll just get rid of that little line of code and all the rest of it. But not great at all. So we had banking companies, healthcare companies were hit hardest, according to various insurance firms. Airlines, as I said, were totally smashed. Total insured losses for non-Microsoft Fortune 500 companies could be between 540 million to 1 billion. A variety of different companies are basically going to be trying to get redress from CrowdStrike, which I'm sure Henry's going to talk about. And the funniest thing I've seen, and this is actually legit, right? No word of a lie, this is legit, that in the meantime, whilst I sorted out everything else out, CrowdStrike has offered a £10 apology gift to say sorry to every customer.
It's £10.
$10, not £10. Apologies, $10. Which I found absolutely amazing.
What's that going to do?
It's just bear with us while we sort it out, and we work out how much we owe you and what we're going to redress you for. But essentially, their stock has been absolutely smashed. So we'll see what happens with that. And obviously, it was one of the world's most prominent cybersecurity firms. Was valued at around 83 billion. Not quite sure what the valuation is right now, but everyone's going to be going after them. I'm just hoping the company that I hold is not their main insurer, and they don't have much with Lloyd's of London. Otherwise, it's going to impact most of our listed companies that are exposed to Lloyd's of London. Henry, over to you, mate. You wanted to talk about this theme, so I'm going to put you in charge, mate. Go for it. We'll try and hang on your coattails, mate.
That's a good summary, Peter. I mean, anybody that is listening to this podcast as of today has just lived through this, so I won't labour the point other than to say that I think we saw for the first time what it would look like if the digital global infrastructure actually fell over. And this was quite a minor falling over as well. ATMs were still working. Payroll was affected at some firms, but not at others. Hospitals seemed to have some backup systems in place, but others didn't. It wasn't as though the power grid fell over either. That seemed to keep working. And what really interested me was what actually caused this. So I started reading into this, and as I understand it, CrowdStrike released something called a patch or a hotfix for Microsoft-driven devices. So if you run the Microsoft suite, this patch, for some reason, stopped interacting with the Microsoft suite and caused systems to basically fall over. A slightly more technical phrase is the blue screen of death, where you go to hit your power button, you get a blue screen, and it just says this computer cannot be turned on. Something has gone wrong. Please contact your administrator. And this happened to millions of computers around the world. As soon as people came in that morning and tried to turn their computers on, nothing worked. Every computer in office blocks was stopped. The servers were stopped. The backups were stopped. The desktops were stopped. The laptops were stopped. Nothing worked. And that caused knock-on effects across a whole range of systems. From what I've been reading, the only way to fix that blue screen of death was to manually log into each individual device, physically delete the update that had been pushed out by CrowdStrike one at a time, and then reinstall the previous update. And bear in mind the fact that the ability to do that is very, very tightly controlled. In a company, you might only have a handful of people that have got administrator access. And sometimes the passwords for those administrator accesses are stored on, guess what? A Microsoft computer. And if you can't get onto that, how do you reset any of the machines? So you just imagine it all around the world, all these IT staff getting screamed at by their CEOs. Oh my God, do something. And it's like, we can't even get into the key cabinet to get the key to reset the machine. So yeah, my sympathies to anybody that works in IT. But this got me looking at, what is CrowdStrike? Because if you invest in the IT space, you might have heard the name. The ticker is CRWD. It's an American cybersecurity company based in Austin, Texas. And they provide endpoint security, threat intelligence, and cyber attack response services. So it all sounds very important, right? We all know that computers are suffering more and more cyber attacks as the years go on. They seem to be growing exponentially. CrowdStrike is at the forefront of trying to prevent these cyber attacks. It describes itself as a single lightweight solution, which is easy to maintain and saves their customers valuable time and resources. Unless, of course, it breaks, in which case it definitely doesn't save customers time and resources. But moving on from that. what really surprised me when I started looking at it was the forecast PE ratio. It's on a price to earnings ratio of 67. You know, here in the UK, I think anything over about 20 is looking quite expensive. So this is a very, very highly rated company. And it deals with some of the largest businesses in the world, as was evidenced by the impact of this outage. Most major banks use some form of CrowdStrike, transport networks use it, payment systems use it. Most large corporates use either this company, CrowdStrike, or its direct competitor, a company called Palo Alto Networks. The ticker is PANW, which also describes itself as a leading cybersecurity brand, which offers a platformized approach that encompasses network security, AI security operations support, and threat intelligence and resolution capabilities. And a bit like CrowdStrike, Palo Alto Networks deals with a huge range of cybersecurity issues. Now, their latest statistics on their website indicate that they've identified 11.3 billion unique attack objects. Now, don't ask me to describe what an attack object is because it's hideously tacky, but this is, to my understanding, 11.3 billion different ways of breaking into a computer maliciously to either steal information or shut it down or delete everything that's on it or get it to do something that, you know, you want it to do. And they've detected 11.3 billion different varieties of this sort of activity. So these companies are hugely important in protecting digital infrastructure. And yet when they go wrong, this is what happens. And again, Palo Alto Networks, people have recognized that it's a leading name in the sector. It's on a forecast PE of 60 times. And yet this got me wondering how much people really understand about what these businesses are doing. Because the more I started reading about these two names, the more I came to realize, actually, I haven't got a clue what they do. I honestly couldn't tell you in much more detail than I just had. So, fellas, what are your thoughts about these two names? And have you looked at the cybersecurity space in much detail?
I've looked at the cybersecurity space in the UK mainly, Henry. And as you know, most of the stocks that we held that were anything above 200 mil to 2 billion have all been taken over. Yeah. And Darktrace being the last one, now gone or going. So we're left with the tiddlers. I'm going to talk about a couple of the tiddlers that we've got in a few more minutes. But I'm not saying they've got a monopoly over there, but those two companies are what are used by the vast majority of the large entities in the US. They're trusted. They've lobbied everybody. Hence the reason they've got a market cap. Palo Alto's market cap is 105 billion. You know, that's quite sizable, isn't it? And then you've got CrowdStrike, despite the outage and the reduction in their value over the last few days, its valuation is still sitting at 64 billion. I saw something on various channels, and basically you had option traders saying that just ignore this. It's just a glitch. It's just a blip. They'll sort it out in next to no time. And they were doing trades for options for the share price to return to 360 within the next 5 to 6 weeks. I just don't see that happening at all regarding the share price. I think sentiment is going to be against that company. I think potentially it might be to Palo Alto's benefit, but I'd be looking at the ones that are number 3 or number 4 or number 5 in the US to pick up the slack as CrowdStrike's gets struck off for a little while before they actually re-engineer their brand and show that this potentially could not happen again, and what remedies they're going to put in place for expediting if such a fault was ever to happen again, because it will happen again.
This is a quick hello to you, our valued Twin Peaks Investing podcast listener. Whatever channel you're listening to, please make sure to subscribe and you'll always be the first to get the new episodes. Thank you for your continued support.
You know,
well, this is the thing. I mean, I can see governments regulating this sector so hard after this incident because we were completely helpless. Everything shut down. And it only lasted for effectively a few hours, and then things started going back up. But how vulnerable were we? Because the government weren't able to prevent this. What if this had been, I don't know, Russian
Don't say it. Don't
hackers
say
or
it.
whatever?
Don't say it.
I'll have Vladimir
Say it.
Putin taking me out with an umbrella in a minute.
You just bloody had to say it, didn't you?
But
Yeah.
you know what
I mean, this is the thing, right? I'm one of those. I love tech. I love the fact that we've got all these different AI capabilities now, expediting, research on medicines and cures and lotions and potions, and therefore everyone's going to have potentially a longer, better, healthier life. Love all of that, but as you say, you've got 1 billion different ways of attacking someone's software or their company or their data. And what's the richest way of getting at people? Data. The wars going forward will be cyber wars. So you've got the AI, you've got machine learning, you've got quantum computing. You're just going like, okay, that's the target. Switch the computer on. It goes, light speed, and then it's in. And it's got access to whatever. So we don't have to worry about the wrong president being in charge to press the wrong button. Just got to have somebody with a supercomputer to get access to the button and just press it anyway. And then, it's just.
Well, you can see it. You can imagine ChatGPT being used for this sort of thing.
It's dangerous.
In theory, it's got safeguards that would stop it, presumably, but there's hundreds of variants of ChatGPT out there. That's the one that's at the forefront of the public mind at the moment. But there are hundreds of AI tools available. A lot of them paid, and a lot of them more powerful than ChatGPT is. Yeah. You set it on a server that's walled off from government interference, if you like. Build it in a closed room. Tell it to do something nefarious. Plug it into the internet and see what happens. How long is it before people are doing that? Because it's a rather terrifying thought.
It is. I'm going to say one thing before Jamie piles in. I think the thing for me is that my hope is that there is an entity out there. I've seen all these sci-fi films, so that's the route I'm going down. There's a global entity out there, right, of good individuals, right, of good actors, not bad actors, who are watching this going, we've got this. They've got all the technology. They're 25, 30 years ahead of us. And they're going, let's just see how long it takes CrowdStrike to sort this out. We'll give them 6 hours. And then when the 6th hour came, they went, oh dear. And they just went and sorted it out. Right? Do I sound like a loon, by the way, when I'm saying this? But they went bang and sorted it out. I'm hoping. I'm sure the Pentagon have got their own system, right? So that times 10 somewhere else as a global entity to just sort out anything where nefarious means could just shut down the planet and then do their own sort of different stuff. I've got my own conspiracy theories around this, and I've had discussions with various people about it. I'm not going to mention it on here because otherwise there'll be a knock on the door and I'll be taken away. Jamie, over to you.
You somewhat preempted my own thoughts on this one. The first thought I had about when this was happening, in fact, there's a direct quote from the CEO of NCC, Mike Madison. Incidents of this nature do occur in a connected world that is reliant on technology. Disruption at one stage in a digital supply chain can have a ripple effect all the way throughout it. That worries me. I don't understand tech nearly as well enough to be able to say whether it can be strengthened to a point where it can be always relied upon. My worry is I don't think anyone can. I don't think anyone has a full kind of overarching kind of view of all of tech, and this is how it works, and this is how we secure it. And my second sort of thought I had on this when it first happened was, this was an accident. Yeah. What if someone did this on purpose? It's like what you've been saying.
Yeah.
If CrowdStrike, and by the way, CrowdStrike sounds like a virus. I mean, it's a stupid name for a company. Just throw that out there. But it does. It sounds like a virus. It's got strike in the name. What if someone nefarious wanted to, push something through CrowdStrike system? Because I don't know much about tech.
Plugged into everything.
I'll tell you one thing I do know. I do know that CrowdStrike has the potential, has the opportunity, has the capability of causing a global outage. So if I was a hacker, let's call myself a tech terrorist, and I really wanted to cause some damage, I'd probably want to be hacking CrowdStrike, or maybe Palo Alto, or one of the many others. And I don't know how difficult that is, but I'd be willing to bet that it's not impossible. And that always worries me.
Yeah.
It worries me that we are too reliant on what might be a vulnerable and fragile tech, which sort of coincides with something you all talked about 2 weeks ago on the podcast, which was actually completely different because we're talking about Labour's plans. But I was thinking, when I see something like this happen with tech, my first thought is not, oh, let's run to the solution and buy them. Let's buy a Darktrace. I know it's too late, but someone like a Darktrace. Mine is, oh, I probably want to own something that is completely unaffected by tech. I was driving up the M1 today and I was watching the workmen. I was driving, but I saw workmen building the central kind of reservation because they're doing upgrade works all the way down there, which they've been doing for about forever. And you're looking at that and you're thinking, okay, there's these people that supplying these cement, they're supplying the tarmac, there's the guys doing the work, there's the big earth mover equipment. That's not a problem. That stuff's going to carry on going ahead. So when I look at my own portfolio, I'm always quite keen to think, it always goes back to that thing, do I genuinely, truly understand what I'm owning? And I like basic things, I'll talk about it a bit later, but, something like breeding, which you mentioned a couple of weeks ago. I like people who make bricks. I like people who do stuff with farming or haulage. If they do it well, it can be a very good investment. And my bet is, it doesn't really matter too much what goes on with CrowdStrike, because people still need to eat, people still need to build houses, people still need to do basic things. And it's sort of the folly of man, I guess, that we build so many systems built on what might be, and I don't know if it's true, but what might be fragile ecosystems. And that, that's just I'm probably more at the Ted Kaczynski end than the tech lover when it comes to tech. A bit of a technophobe, and I realize the irony of saying this on a Zoom call, but you know what I'm saying.
I'm glad you said that before Henry did. No, that's very good
Yeah.
points, though. Very good points.
I think
I think we need to be
on.
I think we'd be mindful of almost being too immersed in tech, but we don't seem to have a choice. My daughter's 16, and she's a tech baby. She's always been around tech. Any problems I have with tech, I'm speaking to her. And anybody born in the last 2 years, crikey, you see them all in the prams playing with some piece of tech, if not the parents' phone. So yeah.
Well, here's a question for Henry on that tech point then, because Henry's 10 years younger than me, and I can remember the internet coming in. Can you remember the internet coming in, or was the internet always there for you?
It wasn't available in homes. I remember when we had dial-up at home, and that was sort of 90s, and it felt new to me. It definitely wasn't something that was around. I remember, when you went on the internet, the phone line went dead.
Yeah. So you do at least remember that.
And floppy disks. I can remember floppy disks as well. They weren't around for very long, but I do remember them.
Yeah, no, cool. So, and Henry, one of the peers for Palo Alto and CrowdStrike is Fortinet, as in as in fortifying the network sort of thing. Did you have any thoughts about that one? Because obviously that's a little bit smaller, and that could be a beneficiary of CrowdStrike having a little bit of time where people don't renew or move across, or have some thoughts on that. Is that one that you had a look
at? Yeah, FTNT, isn't it?
Yeah, FTNT, yeah. Absolutely.
Yeah, $44 billion market cap. I mean, it's not exactly a small company, but it is a lot smaller than those two. I really like it. I mean, the return on capital, when I looked at it, it's significantly higher than CrowdStrike and Palo Alto. So CrowdStrike and Palo Alto are barely earning sort of 5-6% return on capital, whereas Fortinet is up at 40%. And their 3-year average was, sort of 20% when I looked at it. So they seem to be accelerating their returns quite dramatically. Having said that, the overwhelming feeling I got, the more of these names I started looking at, another one I was examining was CyberArk, CYBR, which deals with identity management. And this is all about making sure that the person logging into the computer is actually who they say they are, and the user is actually authorized to do what they're trying to do.
Yeah.
You know, they work with about half of the Fortune 500 companies, so another massive player in the space. Forecast PE, though, is astronomical. It's 130 times. You know, this is not a cheap business at all. But the shares are up 100% since 2020. So if you bought this back in 2020, you'd be doing fine. But the overwhelming thought that I got was that the more of these names I look at and the more I read, the less I feel I understand. They all sound identical. They're all market leading. They're all providing security solutions. They're all credentialed through Gartner, or what is it, the Gartner Industry Quadrant, and they're leaders in their field, and blah, blah, blah. And so I started looking at alternatives. How the heck can you actually just buy the sector, for want of a better way of looking at it? And I came across the LNG Cybersecurity ETF. The ticker is iSpy, which I thought was quite cool. And that aims to track the performance of the ISE Cybersecurity Index, which aims to track a basket of stocks from around the world that are actively engaged in providing cybersecurity technology and services. Now, they classify that industry as having two subsectors. There are infrastructure providers that develop the hardware and software. So presumably these are physical boxes in data centers and security chips that you plug into computers. And then there are service providers that provide consulting and cyber-based services. So this is more along the lines of, the Palo Altos and the Fortinets, and even to some extent companies like Google and Microsoft, who have got cybersecurity consulting divisions. Now, that ETF, it holds a huge range of companies, but in the top 10, they've got Darktrace still, which is now privately owned. You can't buy it on public markets. They've got CrowdStrike, they've got Palo Alto, they've got CyberArk, they've got Broadcom, Cisco, Fortinet, SentinelOne. And you can buy exposure to all of these through the ETF for just 0.69% in annual management fees. By the sector.
Sorry, did you say 6.9% or 0.69%?
0.69%.
Oh, thanks for that. I thought it was part of the conversation you guys had earlier about being completely ripped off and an ETF start meant to be.
No, if it was 6.9%, I'd be telling you to do a
that's
runner.
Not too
but
bad.
It's so cheap.
But what's the performance, Henry? What's the performance, Henry?
Actually, pretty good.
No,
let me just pull up. Hold on. Annoyingly, let me get it up.
I can tell you if you want. I brought it up.
Go for it, Jamie. Tell us the performance, because obviously if it's that cheap, you want the performance as well to go with it. So,
it's 1.04% below the benchmark that it's tracking. Now, 69 basis points of that's coming from the TER, which means they're losing another 35 basis points in tracking error somewhere. I'll be honest, I've probably got a different idea of value. I think 69 basis points is a rip-off.
Oh.
Because it's not a big index, not a lot of stocks, and it's like a 2 billion quid ETF. I swear they could do it cheaper than that. But anyway, I mean, it's a good way of finding the stocks, and I haven't got a clue on this sector. So if I was going to do something, they would probably have to do the way I'd have to do it. But I'd rather just buy farming on something like that.
Just buy what you know.
The performance. Stop griping about it. How has it done for the past 6 months, year, 3 years?
Well, over 7 years, it's got an annualized return of 11.5%, and over 5 years,
annualized 11.5%.
Yeah,
that's not bad. 7 years compounded 11.5% after costs.
After costs.
That's not too shabby, mate. I've got one up here that you've not mentioned, right? Checkpoint Software Technologies in that space, right? £20 billion market cap, a PE of 25 to 30, depending on which one you're looking at. Past year, it's up 44%. Yeah. Year to date, it's up 20%. And today, it's come out with really good numbers, and it's up 8% today. So all the woes that all the cybersecurity companies have got, Checkpoint Software has come out, ticker symbol CHKP, and gone, we're all right. And we're outperformed the markets, and we've got some good numbers for you. Market's gone, hallelujah, and £20 billion market cap company has gone up a further 8%. So that might be one to have a look at, which is not as richly priced as the others if you want a pure play in the cybersecurity space to have a look at.
I really
Any
like
more
that.
thoughts on that one, Henry?
Yeah, I mean, green dashboard here. I'm liking the look of this. Relatively affordable forecast P of 18.7. Forecast to grow turnover at 6%. Forecast to grow earnings per share at 27%. It's got very healthy returns on capital, 25%. There's a lot of ticks in boxes for me there. The only thing that makes me pause.
It's got all downhill from now on, mate, from the ones I'm going to talk about.
I really like it.
Get the guns ready. It's not a bad company.
The only thing
and
that makes me nervous is
the thing about it is, right, you spoke about Palo Alto being $105 billion market cap. This is 20. Either it grows into 100 billion market cap over the next 5-10 years, or one of the larger companies, i.e. CrowdStrike, look at us, we've got, we're sorting it out. They go and get purchased, which, these companies do that. 20 million, we'll have that. 20 billion, what's 20 billion or 25 or 30 billion? We'll have that. It's a possibility. You know what I mean? I'm going to talk about a stock now, which is not listed, but I've got my eyes on it, Henry. And I've not mentioned it to anybody as yet. But I'm thinking, I wonder what that's about. And the company's called Wiz, W-I-Z. And the talk of the town was the fact that Google was going to buy this company for $23 billion, right? And all was going well until at the weekend, and then the beginning of this week, the CEO went, nah, and walked away from Google. Now, not many people walk away from Google, right? If you're the CEO and you've got a chunk of change in that company, you're instantly a billionaire as soon as the company gets bought, right? And they've gone, no, right? So that to me tells me that at some point or other, they're going to IPO this company in the next 6 months to 18 months, right? What will the valuation be? Now, if they don't get a valuation of 23 billion, the other shareholders are going to go, what's going on here? But it might create an opportunity. I've just interviewed a chap called Asif Surya talking about arbitrage. You can arbitrage IPOs as well. Go into the Investing Matters, find my account, go and listen to this chap. He's got a brand new book out about strategies that you can use regarding all kinds of event-driven strategies. Absolutely fantastic interview. But made me think about this particular situation. Somebody choosing to walk away from a Google purchase that guarantees to make you a billionaire. And I'm thinking, you need to watch out for this one when it IPOs. The IPOs at $20 billion or 25 billion, they clearly think it's worth far more than that. Google themselves think it's worth far more than 23 billion for them to have bought it for 23 billion to then grow it as part of one of their subsidiaries. Yeah. So not listed. WIZ, no ticker yet. Keep an eye on this one, right? Because it would have been one of their largest acquisitions by Google. I just think it's a very, very interesting company. And look out for the co-CEO, the co-founder, Asaf Rappaport. He's going to be on all over the news going forward, I think, with regards to what he's doing, when it's going to be IPO'd, and so on, and so on, and so on. And will somebody else decide to go and make a bid for the company whilst it's still private to prevent it going to an IPO? Who knows? And alternatively, as an investor, have a little look and a little nosy around to see if there's anybody that's listed as a private equity company or whatever, that may have shares or a stake in WIZ. Just thinking about it. Right. I'm going to have a little pause at this moment and allow Henry to tell us about the Centrepoint charity, mate.
Thank you very much. Well, where are we with the Centrepoint charity? I'm sorry to say we haven't actually had any further donations from any members of the audience in the last 2 weeks, which is quite surprising because I've put a little note out on LinkedIn, I've put a little note out on Twitter, and although we started out the year with some great momentum, interest seems to be drying up a little bit. So I'm going to spend just a few minutes just talking about what it is that Centrepoint does, and hopefully I can appeal to our audience here to please go online and donate a few pounds if you are listening to this podcast, because we've had prize winners, we've had guests, we've had people that have contributed, commented on LinkedIn, on YouTube. Take a few minutes and do go and donate. But before that, let's figure out what it is you're donating to. So Centrepoint is the UK's leading youth homelessness charity. And what they effectively do is help young people that are either in a state of homelessness or very, very close to a state of homelessness, and try to get them into safe, secure lodgings where they can get themselves on their feet and get themselves the right start in life. Now, I'm very fortunate in that I've always been surrounded by very loving family that have looked after me and have done a terrific amount for me. I never doubted for a second that my parents loved me. I never doubted that my family wanted me to succeed. I don't doubt it now. And I've had an awful lot of people over the years put an awful lot of time in to try and help me succeed and get to where I am. And I'm very grateful for it. But I'm well aware that an awful lot of people don't have that in life. When they come home, there is no hot food on the table. There isn't mum or dad there to help them with their homework. When they are struggling at school or they don't know where to go, there isn't anyone that they can talk to. They aren't supported. And if they're not careful, that becomes a dangerous spiral of feeling unloved, unvalued, and ultimately entirely hopeless. Now, for a lot of these young people that start to go down this path, sometimes they feel as though the only answer is that the world just doesn't care about them. There is no hope. They'd be better off if they weren't in it. And they run away from home. They flee because the circumstances they're in are so dire that they feel that they've got no choice but to pack a bag and run out the door, which should never, ever be the only choice that a child has left in life. We've all got the potential to contribute positively to society, to have a happy life, ultimately. And I think we owe it to each other to try to give that chance to children, some of whom are, with parents who maybe for no fault of their own are unable to support the children, but for others are, they're living in households where they are actively being abused by their parents, or by family, friends, or neighbours, or, they're in dreadful circumstances. And Centrepoint spends all of its time and its money to get these kids out of these situations and into safe and loving homes. Donations to the charity, they're not a vanity project for Peter and I. They're not something that we go around going, oh, look, we've raised money for kids. The reason I picked this charity for our charity this year is because I wanted to do something where we could see the difference. And Centrepoint helps thousands of children up and down the country, and they could help thousands more with the money that we've got the potential to raise. And out of the thousands of people that listen to this podcast every episode, and there are thousands of you out there around the world, we've had less than 100 individuals donate. So please take a few moments after this podcast, or even as you're listening to it right now, go online to justgiving.com/Twin Peaks Challenge 24. Click the donate button and donate a few pounds to a very worthy cause. Doesn't go to Peter and I, it goes to a charity that helps children get the start in life that we should all have. Thank you.
Brilliantly said, Henry, and thank you for that. I'm conscious that we also had a message from one of our listeners as well, whose daughter's friend had become homeless and was asking as to what sort of support and help could be provided. And we said that we could actually try and support him, or I think it was a girl, going forward, and also signposted them to Centrepoint as well. But I think they've got everything covered for the time being. But I think everyone should look out for individuals like that, because at the moment, as we know, we call it infrastructure, but local authority care, community care, and housing situation is very, very difficult for those that fall through the gaps. So Centrepoint do a good job up and down the country. So, and as Henry said, that's why he's chosen that particular charity. So if you can support them going forward with a donation of £1, £2 or £5 or a tenner, please do so, and we'll thank everybody accordingly as to when they do that. Okie dokie. Jamie, my dear friend, you were talking about something completely non-tech, mate, that you wanted to talk about. You took some maybe talking about Breeden because you want to be picks, shovels, bricks, mortar, asphalt, and to boo-hoo all that tech stuff. You know, you're showing your age, mate. It's like I want
Real
proper stuff. We've got Phil too in the corner. Give me some proper stuff. Eh? From Nottingham, mate, not up north or in the Midlands, should I say. So what's this other stock? I've got a couple of stocks I want to talk about, which I know you're going to trash anyway. So just tell us quickly about one of yours, mate.
Yeah, I can be quick on this. So, you know, you were talking 2 weeks ago about Labour Party and plans for get Britain building, or whatever the phrases they use, 3,000 homes per annum plus infrastructure and all that kind of stuff. And I was looking at this CrowdStrike thing, and I was looking at stocks like Breeden that basically trade somewhere close to NAV. And, you know, it's not exciting what they do. They own quarries and they own cement factories. But the thing about a quarry is it's quite hard to compete against a quarry. Because firstly, it's very, very hard to open a new one because people don't like having quarries open near them. And the other thing is, you know, if you're selling type 1 sort of hardcore or something, and you know you've got a site, you know, you've got an infrastructure project just outside Derby or something, then you need to use a quarry just outside Derby. You don't have a choice. You can't source it from Devon because it's cheaper, because it costs you too much to truck it up for the cost of what you're buying. So they end up operating these sort of local monopolies. They don't generate huge returns on capital, but I'm fairly certain they generate returns on capital in excess of their cost of capital. Why Breeden in particular is Breeden came out of it was basically an acquisition vehicle that was set up by a guy called Peter Tom, who's the chairman of Leicester Tigers these days, but once upon a time was a quarryman through and through. And he'd been the CEO of a company called Aggregate Industries, sometimes known as AI, which had made people an absolute fortune through the late 80s until it was taken over by, I think, Holcim in about 2005. Now he's left it now because he's in his 80s and he's busy with Leicester Tigers. But his original CEO's left now. But Rob Wood, who was the CFO as a CEO, is still running it in the same way. They're basically not overpaying for aggregate type assets, investing in them sensibly, running them sensibly, and then you end up having a bunch of little local monopolies. And it's like, well, that's fairly boring. But then on the backdrop of it, you've got a government who's hell-bent on us having loads more infrastructure. And that's going to have to feed through to things like Breeden. So it acts as like a nice little natural hedge to your kind of CrowdStrike stuff. You know, I'm sure Breeden uses email, but it isn't going to stop them digging rocks up. And on top of it, you've got this kind of cheapness with a tailwind. You know, you've got a hedge, you've got a value stock, and you've got a reason why it might start doing better. And, you know, it's not going to make you super rich, but it's not a bad investment, I suspect.
It's probably not going to bankrupt you either.
No, I'll be amazed if it ever did.
Yeah.
Okay.
I really like that.
I'm just crunching some numbers here for you, Jamie. Market cap 1.36 billion pounds. PE around 12-ish. Divi yield whilst you wait of 3.4-ish. Year to date up 10%. And let's still put it 1 year. Let's see what it's done over the last year or so. Up 11% over the past year. And it's not that far off its 1 year high, mate. So 1 year high, 12-month high of £4.13, low of 3.87, and to date closed at 3.94. So it's not showing that much volatility, mate, to be honest with you.
No.
So
the way
that's not too
I look at it is it's 1.6 billion capital employed and a 1.5 billion enterprise value, which means it's trading like it's destroying value, and I don't think it is. I think it's creating value.
Yeah.
So you've got two things. You've got the creation of value, and then on top of that, you've got the fact that it should be trading at a premium, not a discount. So that's what I mean. Cheap, and you've got something in the background. Sorry,
it's not too bad at all. The low, was nearer to £3. So it's at the top of its range. And if it gets the catalyst that we're talking about regarding all the infrastructure spend and construction spend, then yeah, it could carry on. And it's always been a purchaser, hasn't it? Been quite inquisitive over the years, so it's got a good standing in the UK, and everyone else, all the other smaller entities, it can just pick them up as and when any of them become distressed. So yeah, I'm
and
sure Henry's had
speaking on
dealings
the
with them.
acquisition point, it's not a reason to own BREE. You don't own it because someone's going to buy it.
No,
But,
I'm saying they're going to be the acquirer.
No,
They're going
they
to be
are
the acquirer.
acquirers of smaller assets.
Yeah.
But
Yeah,
in the
that's what I'm
same
saying.
way with aggregate industries 15, 20 years ago, it's entirely
Yeah.
feasible. Lafarge, I mean, Holcim is now part of Lafarge. Lafarge or a CRH or one of the really big companies could come along and they'd pay 1.5, 2 times capital employed. And suddenly it's getting taken out at a 2.8 billion market cap when the current market cap's 1.4. And it's like,
yeah.
you're not going to make 100% on the bid, but you'll start going up and then you'll get a bid.
Yeah.
Okay. It's that kind of buy and forget type stock.
Okie dokie. Right. I'm going to quickly talk about a takeover today. Back in August last year and September of last year, I purchased Essential, media company, events company, blah, 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 blah. Average price of 195. Today, Informa, that's been acquiring everybody in the event space and media space over the past umpteen years, took out UBM, took out Tarsus, and now it wants to buy Essential, sorry. And so they've decided to come out and bid a 53% premium to the price yesterday of £3.71 and bid £5.68. And it's a recommended cash offer. The beauty of it being a cash offer and not a part shares and all the rest of it is that the share price tends to go immediately as near as, damn it, to the bid price. If they'd said, oh, we're going to buy it in half shares and half, the share price would now be £5.30 or £5 if you're lucky. Today, the share price closed up at 25% at, because this is the other thing, and I need to touch on this before we move any further, is that the news came out yesterday about the potential of a bid at, if I get this correct in my mind now, 4:47 p.m. However, earlier on during the afternoon, an hour and a half before the close, the share price started to move up. Luckily, I already own the stock. I've held it since last August, right? But should the share price be moving? Who's talking to who? For the share price to have gone up yesterday prior to the announcement at 4:47, when none of us can get access to the market at 4:47. Somebody or entities or individuals were accessing the share price on a rumor, and the share price is moving up.
You want to watch out pointing that out.
Up.
Forget Vladimir Putin. We'll have the City hit squad after us.
I'm sorry, but it's about fairness and transparency here. The share price is moving up 20 odd percent. Yeah, during the day, market shuts, already gone up half of the premium, and then today it's gone up 25%. What's going on? And why do we have these leaky boats everywhere? Everyone should have been given a fair stab to get access to this today, if they wanted to, if they could get at it at 350 or 450 or whatever. Some people got it, some people didn't. It got broke somewhere else. I'm just saying it as it is, guys. You know what I mean? It shouldn't have been out. If it comes out at 8 o'clock in the morning or 7 o'clock, sorry, everyone gets access to go bang, bang, bang. The traders are on it already trying to get scalp 3%, 5%, whatever. Traders do what you want to do. Yeah. But as an investor in the stock, I was looking at it going, okay, so it's moved up and there's a rumor of a bid. Does it mean it's going to happen? You know what I mean? Today, Bosch recommended, and we're going to go for it. And it was cash. So yeah. The beauty of this particular one for me is that some of you might recall that finally, after 20 odd years and more, was it 20? Yeah, probably nearer to 30 odd, to be honest with you. I trimmed some AstraZeneca shares, and this is one of the stocks I'd reinvested that compounded of 20 bagger into. So I'm happy that my research, and I know some people go, oh, we spend so long talking about some of the parts and intrinsic value. I thought in my work of buying this on sub £2 that this share Essential was worth more than £3. after the special dividends, and the dividends are paid out already, it's now being valued at more than £6. So sometimes you do the research and you get it wrong, hold your hand up. Sometimes you get the research and it comes out and you're lucky and it turns out right. It is what it is. But we've got more takeovers coming, because clearly from this being sub £2, right, last year, not even a year ago, for it to be going out after paying out £1.20 odd, still getting a bid at £5.68. That's ridiculous. So do your research, folks. Try and find something you can invest in and wait. If you get paid the dividends while you wait, brilliant. But I've exited the shares today at £5.64, and I'm going to reinvest that at some point. I've already got my eyes on a few other bits and pieces. We've got a nice cash buffer to buy stuff as and when I see the opportunities, and I'll keep on buying stuff after doing my research. And mate, did you see that yesterday? Did you see it moving up? Did you? Or you saw it this morning?
It wasn't one I was watching, but that story is identical, or nearly identical, to Hargreaves Lansdown, which I used to hold.
Absolutely.
Somehow there was a takeover offer made weeks ago. No one told anyone anything, and then all of a sudden the news just happens to be released on a Wednesday evening, a few weeks after the fact. By which point, anybody that wanted to get in had already got in. Anybody that had sold because the shares were going nowhere had already got out.
Yeah.
If there's anybody from the FC on the in our audience, I wish they'd do something, because frankly, it just makes a mockery of fair and transparent markets. But
it does. Right, and having said about a good stock that I actually owned, I've got to talk about how quickly about a howler when Martin Flitton was on here, and I said, "Oh, it was a research idea, because they've got this food chain that could do well, all the rest of it." And I mentioned Tortilla Mexican Grill, yeah. And today they came out with some numbers, and it got spanked by 12%, basically saying that revenue's down 1.2 million on the year. Like-for-like revenues were down 5.8, got spanked 12%. Makes it cheaper for me to keep an eye on. And at some point or other, when they say they're actually growing, if it ever happens, I might have a little nibble at there. I still don't own it, but I gave it as an suggestion for people to go. Martin went, no chance am I going anywhere near that. I might have a meal there, but I'm not going to buy the shares, essentially what he said, I think. I think you agreed with him. And X amount of weeks later, already down 12%. So I'm hoping folks did their research, agreed with Martin, not me, didn't go anywhere near it.
Whether you are an experienced or new investor, you know how valuable it is to conduct portfolio enhancing analysis and to have easy access to data that will give you the edge. As a Twin Peaks investing podcast listener, you can access an exceptional offer via SharePad from ShareScope, the UK's #1 investment data and analysis software for private investors and traders. This special Twin Peaks offer is available to new subscribers only, and you can subscribe using the promo code TWINPETES. The incredible and exclusive offer means that monthly subscribers will get their second month free, and annual subscribers will get their 13th month free. Sign up and subscribe to SharePad today using the Twin Petes promo code, and you can save up to £69. Visit sharescope.co.uk/SharePad for further details and subscribe to the investing and trading analysis and data you need.
Right. Do you want me to talk about some cyber stocks, Henry, so you can give me a kick in? Yeah.
Well, if you're feeling brave, go on.
Right. I'm going to go quick fire through on a couple here, right? And I'm going to start with GB. I'm going to leave the worst to last, because I feel I don't need to get kicked too early. Okay. Look at Jamie already smiling.
I know which one you're going to say.
I'm going to start with GB Group, Henry, right? Which is ticker symbol GBG, market cap of 464 million. One of our tiddlers. Obviously, potentially, it's one of them that could get taken over, but we won't say that too loudly because we haven't got many of these companies left. But we've got, let me just find the right screen that I want to find here regarding its metrics. We've got GB PLC, which provides identity intelligence solutions through its three divisions: location, identity, and fraud. It offers electronic ID verification services, ID registrations, ID engagement, and ID trace. Now, some of you may have seen this in the last week or so since Labour has been put into power, and there was talk about it some time ago, and lots of people poo-pooed it. And I'm a big conspiracy theorist regarding George Orwell and co. And I suspect that we are going to go down the route at some stage or other, whether it be this government or another one, where we have got a situation where we've got ID. Everyone's going to be ID'd. I'm not saying we're going to be chipped, but you're going to have to be carrying around an identification. It won't be a driving license. It'll be another form of identification, which has got multiple registrations and ID on. And if that does happen, other than the larger entities, and you know what it's like with most governments, the big entities that have got global sort of reach and global sort of brand recognition to do these. So the UK companies that we've got might well be overlooked. But given the identification side of it, I think GB Group, GBG, could be potential investment, given that some of the work they may get if we go down that route. Obviously, I don't want to go down that ID route and everyone being almost chipped, walking around with a permanent identification they've got to show every time they make a transaction. But so this one here, GB Group, I've got as a potential stock. I think it's interesting. Geographical presence in the UK, United States, Australia, sorry. And I'm not sure what you guys have looked at it. Price range 90 pence up to 150. Currently sitting at £1.47. Up 52% in the last 1 calendar year. Henry's already smirking. Go on, Henry. Do your worst. Then you, Jamie.
To be honest.
Well, say again. Speak up when you're telling me off. Come on.
I was going to say it looks like it looks dire to me. I mean, it used to be.
I've not even got to the dire one yet, Henry.
If there's worse than this, I mean, it's on a price to earnings growth ratio of 1.7. It's on a PE of 20. It's gone from a share price of £10 a share all the way down to whatever it's at now, £3.40. It's got a negative return on capital. There's not a lot I like in there. And if there was a government mandated ID program, I think it would be more likely that somebody like the Passport Office would run it than GB Group.
Yeah, sorry, I put the wrong prices out there for it's the price for something else. Yeah, you're right. You're absolutely right, mate. But this is about, giving research ideas, not making recommendations. It's been around for a long time. It's one of those that promised a lot and hasn't really delivered in the past couple of years, admittedly. But I'm trying to just stick on the theme. What have we got regarding quality of stock in the UK in comparison to Palo Alto or CrowdStrike or Fortinet? Nothing.
To be fair, at least GB Group's never caused a global IT catastrophe, so it's got that going for it.
It's got one thing going for it. Okie dokie. Jamie, have you ever looked at, I know you're not a techie guy, but have you ever looked at GB Group? Or do you just want to assassinate what I've just said about them as a potential research idea?
I'll praise it with the point I made earlier about me basically being a Luddite. But I've always thought with GB Group, if one thing had to be threatened by blockchain technology, it's something like that. Because the purpose of blockchain is you can create like unique individual assets. That's how the currency works. But it's also how like NFTs work, like a non-fungible token. If you think of a non-fungible token in terms of identification, then I've always been concerned that something like GB Group could be threatened by people effectively having their ID on some sort of blockchain. And then, that horrible, horrible phrase you hear from Bitcoin people that says, Bitcoin fixes this. I have a feeling that blockchain might fix this, and you might not need something like GBG. And that's the problem with it, is it a legacy business? you know?
Yes. Yeah, I would agree. I think that's a proper term to use about it. Legacy,
Mm.
X growth. You know what I mean? It's just not done anything for a long while,
It
and
might be
everyone's waiting for it to
ex-business
get.
at some point.
Sorry, X business. Oh, that's harsh. That's harsh. It could get well. I mean, it could well taken out, or could just carry on that slow decline. And
Yeah.
that's what happens with some of these businesses. I mean, it goes back to your point about recognizing when the growth stops. You know what I mean? You've got to be keeping an eye on what's going on with the company and the business and the underlying stuff. You know, you spoke earlier about BRBY. You know, it peaked so long ago, and now it's still on the wane. When does that stop?
The other
Is it going
thing
to be a
I
fiver
can't
for BRBY?
the other
You
thing
know,
I can't
so,
quite figure out with GB Group, their debt shot through the roof in 2022. I've got no idea why, but I mean, it absolutely skyrocketed. And yet the share price has just continued tanking. It started falling in 2020. They seemed to build a stack of debt in 2019. It dropped a bit in 2020, seems to have disappeared in 21, and then come back, 10 times the size in 2022. What on earth are they doing with their
I've not dug
balance
too
sheet?
deep. My assumption would be that it's made a purchase there, Henry, at some point, but I've not dug deep enough to go back that far to find out
Well,
where all
whatever
that
they've
debt
bought,
came
it doesn't
from.
seem to be working, would be my
Absolutely, as
observation.
often as often happens when companies indebt themselves and then take on an acquisition, it doesn't
It
work
was an
out. Right?
acquisition. It was an
Yeah,
acquisition.
yeah, yeah. Okay. So quickly, two more. Right. I don't know whether to put the worst one now or last. I'll do the worst one now. Right. And I'll say it very, very quickly so people don't look at Jamie smiling already.
Can I
One
say it? Sorry.
disco became Serata. Whoa!
Mm.
Right. And it was a billion market cap unicorn, blah, 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 blah company. Fraud ensued, CEO, CFO, gosh, bosh, big fundraising, came back to the market, raised money at, I don't know, whatever pences. I bought some, it shot up after I bought it after it resurfaced. And it's been sitting there transitioning because the brand and the obviously they changed the name to Serata. I'm talking about Serata, folks. Sorry, ticker symbol CRTA. I love the CEO that's in there and the potential that he can do. He's got a massive uphill struggle to get the rebrand off and to get their actual revenue in. And what was said allegedly, I'm not sure if it's been fully proven yet. Still, was that a lot of contracts were written into. We've won this, we've won that. And it's worth 140 million or whatever it is. It was worth zero. So
Yes.
they've got a situation now where their market cap is tiddly, sub 50 million, still trying to grow, still trying to get revenue, still trying to grow in America. And not that the revenue streams not coming, the contracts are not coming that fast. And I'm not sure this X $1 billion market cap company will ever transition or how quickly it can transition to even get to 100 million market cap, never mind a billion again. It's got a great team involved in it now. It's involved in all manner of different software and cybersecurity sort of solutions. But the revenue contract size is tiny. I actually own the stock, not ramping it. Don't go near it, folks. Henry, or no, let the smiling assassin go first this time. Go on, Jamie.
Look, point
Be
one.
polite.
Point
Just
one.
be polite.
No. Point one. I do not trust companies that change their name. It's just
Right.
a
First shot
silly thing that
fired.
I
Okay.
have.
Right.
The
Okay.
fraud
That's
thing.
fine.
It was one senior employee. I don't know what senior employee means. Basically committed mass fraud, which is like I've sold all these contracts, presumably to get a bonus, and it was all fictitious. Now this guy,
Allegedly. Use the word allegedly with all these things,
no,
please. We
that's
don't want
not
to get sued on
alleged.
here.
That's not alleged because that's in their report. Now this person, I don't know, man or woman, I don't know who it was or anything. They deserve to be in prison. Like there was 30% of their staff had to be laid off because they'd ramped
Yeah.
staff because of sales that the work didn't exist. Like there was some really genuinely two people devastating reactions to this.
Absolutely agree.
That said, this CEO is the guy that helped turn around Sage. He's the guy that helped turn around Micro Focus before the
Yep.
takeover. The balance
Stephen
sheet's
Kelly.
now okay. Like if it goes up, if it's fine, it'll go up a lot. And if it doesn't, then you're going to sit on nothing. So in some respects, it's a kind of a heads you win lots, tails you don't really lose very much. But for
Yeah.
me, I look at it and I think you don't lose money by not owning something that goes up a lot. And if it goes up a lot and I don't own it, well done to the guy, to the men and women who do own it. But I'm not going to be following you with it because I don't understand it enough. I don't trust it. There's just so much wrong with it from a kind of, it doesn't pass a sniff test that I'm not going to go anywhere near it. But that doesn't mean say it's not going to go up a lot.
Mate, I'm agreeing with all the points you've just made. Yeah, and I've taken the bullets. I fully appreciate what you've said with the candor that you've given it to me. I'm not sure Henry's going to be as polite, but go on, Henry, get your gun out and start firing.
I'd rather set fire to my portfolio than buy that company. With apologies to Stephen Kelly, who I know follows me on Twitter, who seems like a very nice man. He's the new CEO, so please don't send an assassin squad after me, because that's 3 people that'll be sending assassins after me now. But like Jamie, you know, that whatever happened with those contracts, that guy didn't do that on his own. His boss would have signed off the sales orders, finance accepted it, it went into audited accounts that were issued publicly. The amount of people that got hoodwinked by that, someone's not paying attention. I don't even know if they're still there or not. You know, I've got no idea how it got that bad. But then when the shares, you know, when these orders weren't real, we get back to actual revenue figures. And on actual revenue figures, this business can't make money. You know, it's never made any money. It's only generating tens of millions in revenue to start with. And it's losing a fortune to do that. And from what I can see, it's basically some sort of data transformation tool. It takes large data sets and helps you upload them. That doesn't sound even slightly unique to me. I'd be more than happy to have some CRTA staff come and yell at me and tell me I don't know anything about tech. But if this thing was essential,
I'm going to try and get Stephen Kelly on the next show to speak to you. Is that all right?
I think I feel a cold coming on.
I'm joking. No, absolutely. You know, I made 2.5 times the money. I've got a little bit left. I'm just watching it there, mate. And it's not rotting. It's not losing me any money. I'm waiting for that big contract to come. It hasn't come. I'm still holding.
To be honest with you, if a big contract does come, I'd be super skeptical based on what happened the last time a big contract
come on. Even with a new management team.
Even with a new management team. If they suddenly turn around and said they've got like a £500 million order, I wouldn't trust it.
Wow, Henry, you're so harsh today.
I just
you're 1 year older and you've turned harsh overnight. Man alive. Right, last one, very briefly this one. And get out the guns. I'm going to say this name now. NCC, not car park, group. Yeah, Henry's already making faces.
That's because I own it.
Well, you own it.
I own it.
Right, okay. I'll let Jamie assassinate this one then. So we have got UK-based provider of information assurance software solutions to the transportation, finance, retail, Internet of Things, oil and gas end markets, and the firm, operations are organized below divisions of assurance, which offers security and risk and consulting services, group escrow, which offers software escrow services with third-party agent, domain services, which maintains and publishes trust security standards. Roughly half the firm's revenue is generated in the UK and the rest from Europe and the rest of the world. So there we have it, right? So the share prices, which I gave incorrectly for the other one, up 52% in the year. So Henry's done really well in the last 12 months. 12-month range of 90.5 pence to £1.57, which was only recently in June, the 21st of this year. And it's currently sitting at 147. So really, really close to its 52-week high. Jamie, any thoughts on NCC? Have you ever looked at that one? Any interest in that one?
Yeah, in the past.
Not legacy, still making money. Revenues are going up. Up 52% year to date.
It's one of those businesses. It's been broke and fixed twice, as far as I can tell. It's in an area of technology that I've said it already. I'm a bit of a Luddite. I don't really fully. I understand the words that are coming out of your mouth, but my problem is I don't understand how how you can defend the positions there. Like I can look at the figures and go, okay, that's good return on capital or whatever it happens to be. But I struggle with the what's it going to look like in 5 years' time question. And my worry on business like a business like NCC is I'll be the last to know. Okay. It'll be too and as a result, and it's a little bit like that very first point I talked about earlier, if I own something like NCC, and I'm not against it from a fundamentals point of view, I'd probably have to keep really close eye on the technicals, because if its business stops doing quite as well as it was, I probably won't detect it straight away on the fundamentals. And if I'm really bad, I won't detect it until you have that really bad day like it's had in the past and dropped 50, 60%, which it's happened a couple of times in its history. And I would rather be out well before that happens. So for me, the easiest thing to do is not be in it in the first place. But if I was in it, I'd end up having to have a kind of, Jace, who was on with me that time, was the stealth trading guy, that kind of
watching the technical analysis all the way through,
attitude to holding it. And from a technical point of view and a fundamental point of view, it actually looks quite good.
Okay.
So I see why Henry owns it.
Henry, defend your space, mate. I didn't know you owned it, so go on. Let's hear why you own it, despite it already going up 50%, and you haven't gone and grabbed it. Right, so you're being a connoisseur right now, as Lee Friedman Shaw would say. You're actually just running your winner and looking for a multi-bagger.
You make an interesting point about the connoisseur thing, because for those of you that haven't listened to Peter's other podcast, The Investing Matters, he's just interviewed Lee Freeman Shaw, not this episode, the one before, who wrote a great book called The Art of Execution, in which he profiles different investing methodologies.
Tribes, yeah.
One of which is the connoisseur, where you very, very carefully, you select your positions and then you average into them over time. And so when something pulls back, you buy a little bit more because you know exactly what you've got and you're comfortable with it. And I tend to have that sort of approach. I don't hold and do nothing. I tend to either average in, or if a company's not working, I'll just kill it. And NCC Group is one of these where actually Jamie's saying the technicals look good and the fundamentals look good, but I'm not that happy with it. I've held it for 3 years. I bought it near all-time highs. It's sort of £3 a share. It's now down at half of that, £1.40 or whatever it is, £1.50. It started to make a recovery, which is saying to me that the market's building some interest in it, which is fine, but it doesn't feel like something I'm really happy owning. It's got a lousy return on capital of 1%. The dividend it's all right, it's 3%. It's never really blown my socks off. They've got headwinds with their revenue. They've got declining revenue, and they have had for a while. They don't seem to be showing many signs of that turning around. They've got declining earnings per share, and they don't seem to be showing many signs of that turning around. And so I'm going, I don't really want more of it. Should I just get rid of it? And that's kind of where I'm at with that at the moment.
So to coin Lee Freeman Shaw's statement in the pod that I did with him for Investing Matters, did you average down near the lows of
I did average
last
down.
year?
Yeah.
And therefore, are you now in profit, given the fact it's up 52% in the last year?
Yeah.
So if you are not adding now and you're in profit, why are you still keeping this stock? As he would say to his fund managers.
You see, and this is what got me thinking about it. I was listening, and I'm thinking, hey, look, I think he calls them rabbits.
Don't be a rabbit. Don't be a Peter Rabbit. Yeah.
And he dragged one of his fund managers into a room and went, "You own this. What are you going to do about it today?" And the guy bluffs and blusters and goes,
"I think he did it more than once,
2
Henry.
weeks."
I think he's done that more than once.
So maybe you're right. Maybe I ought to kill it tomorrow morning.
No, listen, mate. The last time you did that, there was a takeover the following week.
Well, this is what stops me. This is what stops me. It's like sometimes it is easier to do nothing, but.
There is this thing, and I've seen it a couple of times, and it's happened to me, numerous occasions, right? I'm sure it's happened to Jamie and other people. If you want to guarantee a share price to move, right, that's not really gone anywhere for a little while, sell it.
Yep.
And it's guaranteed to move off without you. But sometimes you've got to go, you know what? For the grace of God, I've had other stocks that have done okay for me. And I'm cold. Once I'm done, I'm done. What happened to me with, I think it was Spirent. Up there, it's going to get taken over. No, it's not. Drop. You know what? I'm all right. Drop. I'll buy some more. Drop. I'm going, oh my God, I've had enough. What happened? Pop, pop. Then takeover. Left me all beat. I'm like, I don't care. It happens. None of us get it right all the time. We all get losers. We all have to deal with it. Yeah. Don't get lost in denial.
Yep.
You have to deal with losers. And I have had loads. Yeah. Which is why I always advocate for transparency. You know, we had James today. He's a stock that he holds, came out this morning. He was expecting some good numbers. They basically said X amount of months ago, there's going to be good numbers, right? Today, Bosch, profit warning, down 25, 30%. I'm not sure where it finished. And he's like, yeah, still hold it. This is a ridiculous RNS. Transparency, honesty. We need more of that. People talking about the good stuff and the bad stuff. Yeah. Anyway, Rare, mate. It's been a marathon again. I haven't had any tea yet. Need some Scoobies. Jamie, you're here again, mate. Thank you ever so much for coming on this pod, making 132 excellent. Keeping myself and Henry, you know, up there with the quality investors, you know, rubbing off on you a little bit to say we've been hanging out with a fund manager on this podcast. So thank you ever so much for coming on and making it a good quality pod. Henry, as always, mate, even though my jaw's still hurting from the jabs that you've given me, been thoroughly enjoyable. Thank you ever so much for pressing again the charity for Centrepoint. And unless you guys have got anything else to say, we can call it a day there for 132. Jamie, any passing words, mate?
No, not from me. Thank you very much for having me again.
Dokey. Thank you ever so much, sir. And we'll see you on the pod. Those of you that haven't done so yet, please find Jamie on @Jamie, capital C, capital D, W, spelled DUBYA. We've explained that on a pod last time he was on. I'm not doing it again. Go and find him. And he's also got a few articles on the ShareScope, SharePad website. So go and read that one. Obviously, he's just mentioned the one he's just written on BRBY, but there are others. So go and find him. And please go and find Henry at his blog, which is the
Ethical Entrepreneur.
The Ethical Entrepreneur. So go and find him there, and also find Henry and follow Henry's account at HTViola on Twitter. Ladies and gents, have a fantastic weekend when it arrives. We've done this on the 24th. It'll be coming to you on the 26th. Have a lovely Friday. Hopefully it stays dry. Have a great weekend. We'll see you, and it will be August next time we see you. And hopefully we can watch a little bit of the Olympics without it all kicking off in Paris. Ladies and gents, take care. God bless you all. Be kind to each other. Bye-bye.
This Twin Peaks Investing podcast is brought to you in association with SharePad from ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.